you have to grasp and understand this because it's going to determine your failure or success over the next 5 to possibly 10 years when it comes to trading and investing. So this is absolutely critical. We're setting a bit of a historic precedent here.
Was it really that event that caused the rally to go up?
The economy is going to start suffering pain.
That's going to be bonkers. Welcome everybody to Talking Trades. Kevin Wadsworth and myself, Patrick Karim from NorthStarBadCharts.com. And today, Kevin will be going in details, showcasing you a concept that we came up with on our website called the capital rotation event, and also, or you could also see it as a capital rotation process. And this is critical, guys. Not many people are looking at that, but because we have the power of the long-term charts, we're going to show you in details what this implies and how you could add the advantages to your trading there. So shoot, Kev.
Okay, thanks, Pat. We're looking now here at the money supply to gold ratio. And as Patrick said, this is to run through something called a capital rotation process. What is the capital rotation process? Well, really, you have to grasp and understand this because it's going to determine your failure or success over the next 5 to possibly 10 years when it comes to trading and investing. So this is absolutely critical that everybody out there fully understands what is going on here. Capital rotation. Now, capital rotation can mean a movement of capital between different sectors, between markets, and in this case, moving in particular, a movement that we're looking at that takes place on a cyclical basis between stock markets, general equities, and precious metals. And precious metals are important here because gold, as a tier one asset and as a monetary metal, is historically has a role to play for measuring these movements. Okay. Now, the US dollar, as we all know, has been eroded in value for many, not just years, but decades. Okay. And the US dollar is in quite possibly terminal decline. Okay. But gold maintains its purchasing power. Gold is a constant. So if you're going to measure anything, okay, whether something's in a bull market or a bear market, you should be using gold to measure that. Okay, so this is the chart for money supply to gold. And the thing to notice is that gold bottoms when this chart reaches a peak. And when it breaks down below the moving average, below the Ichimoku cloud, below support, when it breaks down, gold enters a bull era. Okay, now I presented this chart to website subscribers and to people who follow me on social media before it broke down. Okay, I put this chart out there before it broke down, and I said that this was sending a signal that it was likely to break down because of the chart setup that was taking place at the time, and that if it did break down, a huge gold bull market would be the likely result. Okay, so that's one piece of evidence. This is the US dollar index versus gold. This is one piece of evidence. What I said here is that when DXY breaks down versus gold, it is likely to be telling us that we have a huge gold bull era developing. Every time this chart breaks down, it's telling you that DXY is underperforming gold. So whatever strength the US dollar index might happen to have is being completely overridden by the strength of gold. So gold's real strength is beating any relative strength that the US dollar index has versus a basket of other currencies. Okay, so it broke down, and this is one piece of evidence that we are in a huge gold bull era. This is gold versus CPI. Gold versus CPI broke out to the upside. Gold is outperforming consumer prices. Whenever that happens, it is a piece of evidence that gold is in a bull era. Not just a bull market, but a bull era. A bull era is different to a bull market, okay? It's not quite the same thing. Gold versus breaking out versus producer prices. Now I can pop this chart onto the quarterly chart to make it clearer for you, and I'll just do that for you right now. So here we are on the quarterly candle chart. Gold breaking out versus PPI. It's a very important piece of the puzzle as well, and adds to the evidence that is gradually gathering. Currency in circulation versus gold. When this chart breaks down to the downside, you can see that the chart there is already below support. It's below the moving average. It's below the Ichimoku cloud. This is the quarterly chart, so it's a quarterly breakdown. And when this chart moves to the downside, it's telling us one piece of evidence, not conclusive, but it's one piece of evidence that we are entering a gold bull era. This is the equal weighted S&P versus gold. Now the equal weighted S&P is breaking down strongly versus gold. I'll pop this onto the monthly time frame for you so you can see what's going on. Equal weighted S&P has fallen below the moving average there. It's fallen below the Ichimoku cloud, and it's fallen below the support line. That's another piece of evidence that we are entering a gold bull era. This is gold versus the New York Composite Index. Gold versus New York Composite Index is breaking to the upside. It's breaking above resistance lines, horizontal and declining resistance lines. It's breaking above moving averages, and I'll just pop this onto the 36-month moving average just for some consistency there. So above the 36-month moving average, above the Ichimoku cloud, it's breaking out. So gold is now breaking out versus the New York Composite. The Dow Jones versus gold breaking down. So this is gold outperforming the Dow Jones index. It's happening now. It happened, if we go back on the chart, it happened in 2002 there. It happened in the period 1968 to 1972, and it also happened in 1930. You can see the breakdown there. Signal number 1, signal number 2, signal number 3, and now signal number 4, the fourth signal in 100 years. The Wilshire 5000 breaking down versus gold on the quarterly chart. If we pop it onto the monthly chart for you, you can see it in a little bit more detail. We are below support lines, below the 3-year moving average, below the Ichimoku cloud. Okay, so the Wilshire 5000 clearly breaking down versus gold. The Russell is also below the Ichimoku cloud, below the moving averages, below support lines. It's sending a warning. Gold is sending a warning. It is breaking out versus all of these instruments. Look at the SPX. Gold is very close now to a capital rotation event. It is breaking down. This chart is breaking down. The SPX is breaking down versus gold. It's not a clear and decisive breakdown yet, but if I zoom right in, you can see it's getting there. It's pretty close. Much more weakness. If we get much more weakness here, then it'll become much clearer and much more evident. So the SPX is showing weakness versus gold. The NASDAQ, these are the last two charts to break, by the way. All the others have broken. All the ones with the red flags here have broken down versus gold. SPX and NASDAQ are in the process. Again, if we zoom out on this, you can see that the NASDAQ has not made new highs against gold this century. In the last 24 years, the NASDAQ has failed to make new highs versus gold. It's hit the resistance line and it's breaking down again. So capital rotation evidence is on 10 out of 12. 10 instruments out of the 12 have broken down versus gold. Even if we look at the Mag 7, Tesla, broken down versus gold. It's below the moving average, below the Ichimoku cloud. It's in a downtrend. It's in a clear downtrend. Tesla broken down versus gold. Amazon versus gold, looking weak, looking very toppish there. It's below the 3-year moving average, below the Ichimoku cloud. Only has to move down a tiny bit more, and that will be a breakdown for Amazon versus gold. Google has gone nowhere versus gold for the last 3 years. Okay, it's made a lower high. It's now below the 3-year moving average and looking like it wants to break down. Apple versus gold, again, looking very toppish here. The structure is looking very toppish. We've broken down below rising trend line support, below the 3-year moving average. We're heading down into the Ichimoku cloud. That looks weak. Microsoft versus gold, well, that doesn't look too clever either, does it? It's broken down below rising trend line support, below the 3-year moving average, and it's trending down now into the Ichimoku cloud. That is another piece of evidence suggesting that a huge gold precious metals bull market is developing. The only two that are not showing very much weakness versus gold at the moment, Meta and, of course, NVIDIA. And I have to say at this point that it's not absolutely necessary that all of the Mag 7 break down versus gold to give us a capital rotation event. There will always be some stocks that hold their ground versus gold. But if the Nasdaq and the S&P break down versus gold, it is game over. We have a capital rotation event. Gold will rise by hundreds of percent. Stock markets will fall 50 to 80%. That's it, Pat.
That's brilliant. And just to mention, guys, these capital rotation events, they occur once the markets start rolling over 10, 15% or more. And then the aggregate of market participants realize, hold on, this is not a 10, 15% correction and then on the way back up. This is a 10, 15% correction that's going to be followed by another 15, 20, 30, 40% correction. And that's what we've previously seen in all these major capital rotation events. So it's not just gold that's going to be outperforming and breaking out versus these. It should be accompanied also by a market rollover denominated in fiat. So thank you very much, Kevin. That was brilliant. Guys, if you want more of this, make sure to like, subscribe, and keep following us. Thanks.